welcome back to Thomas Planet News. This is episode 3. Today we are talking about one of the most revolutionary and controversial financial topics in the world, cryptocurrency. Some say it is the future of money, some say it is a bubble, some became millionaires, some lost everything. So what is the truth? Let's understand cryptocurrency from the beginning, its history, how it works, whether it is profitable, global tax rules, and whether it really has a future. So let's begin. First, the history. The idea of digital money existed for decades, but the real breakthrough happened in 2008 during the global financial crisis. An anonymous person or group using the name Satoshi Nakamoto released a white paper introducing a decentralized digital currency called Bitcoin. In 2009, Bitcoin officially launched. What made Bitcoin different? It was not controlled by any bank. It was not issued by any government. It runs on something called blockchain technology. Blockchain is a digital public ledger. Every transaction is recorded. It cannot be easily changed or manipulated. Instead of one central authority, thousands of computers around the world verify transactions. This concept is called decentralization, and that is how cryptocurrency was born. Now, which was the first cryptocurrency? The first and original cryptocurrency was Bitcoin. After Bitcoin, many others were created. Some of the most popular ones today include Ethereum, Binance Coin, Solana, and XRP. As of today, there are more than 20,000 cryptocurrencies in existence. But here is an important fact. Only a small percentage of them have real value or strong projects behind them. There are different types of cryptocurrencies. Coins like Bitcoin, tokens built on platforms like Ethereum, stable coins which are linked to real currencies like the US dollar, and meme coins which started as internet jokes but gained popularity. So the crypto world is massive, but also very crowded. Now comes the big question. Is cryptocurrency profitable or a lost business? The honest answer is, it depends. Early Bitcoin investors made extraordinary profits. People who invested a few thousand rupees or dollars in the early years saw life-changing returns. But crypto markets are extremely volatile. Prices can rise 50% in a week, and also fall 50% in a few days. There have been major crashes in 2018 and again in 2022. Some exchanges collapsed. Some projects turned out to be scams. Many people lost money due to lack of research. Cryptocurrency is not a guaranteed income system. It is considered a high-risk investment. Some treat it as digital gold. Some treat it as trading speculation. The golden rule is simple. Never invest money you cannot afford to lose. Education and risk management are very important in this space. Now let's talk about tax regulations in different countries. Governments around the world are now regulating crypto more strictly. In India, crypto profits are taxed at 30%. There is also 1% TDS on transactions, meaning tax deducted at source. Losses cannot be adjusted against other income. In the United States, cryptocurrency is treated as property. Capital gains tax applies. All transactions must be reported to the IRS. In many European countries, it is also treated under capital gains tax rules. In the UAE, crypto regulations are more friendly. There is generally no personal income tax on crypto gains. In Singapore, there is no capital gains tax, but frequent trading as a business may be taxed. So before investing, always understand your country's tax rules. Ignoring tax regulations can lead to serious legal trouble. Now the most important question, does cryptocurrency have a future? There are strong arguments on both sides why it may have a future. Blockchain technology is being adopted by major companies. Banks are exploring digital assets. Cross-border payments can become faster and cheaper. Smart contracts can automate agreements without middlemen. Institutional investors are entering the market. Even central banks are exploring CBDCs, central bank digital currencies. On the other hand, there are challenges. Regulation uncertainty, market volatility, cyber risks, energy consumption concerns, and lack of trust due to scams. The reality is this. Not all cryptocurrencies will survive, but blockchain technology is likely to stay. Just like during the dot-com bubble, many internet companies failed, but the internet itself changed the world. The same could happen with crypto. Only strong projects with real-world use cases may survive long-term. Before we close, here are a few extra points you can think about when analyzing crypto. What is crypto mining? It is the process of verifying transactions and earning rewards. What is a crypto wallet? It is a digital tool to store your private keys securely. What is the difference between crypto and stocks? Stocks represent ownership in a company. Crypto represents ownership of a digital asset. And most importantly, always research before investing. Do not follow hype blindly. So what is the conclusion? Cryptocurrency is a financial innovation. It offers opportunity. It carries serious risk. It is neither completely good nor completely bad. It is a powerful tool, and like any powerful tool, it must be used wisely. What do you think? Is cryptocurrency the future of global finance? Or is it just a temporary speculative bubble? Let us know your thoughts in the comments. If you found this episode informative, please like, share, and subscribe to Thomas Planet News. This was episode 3. Thank you for watching. Stay informed, stay aware. See you in episode 4.